Is now a good time to buy a home or should you wait? That is one of the most common questions I am asked. It's been the most common question for probably the last month or so, and with good reason. I mean, mortgage rates have been on a roller coaster ride. Home prices have soared over the last couple of years, and there's just a general amount of uncertainty out there about what the economy is going to do and just everything in general that's going on. So in today's video, what I wanted to do is actually show you, provide you the information where I'm going to compare what it would have been like to buy a home last year compared to what it looks like to buy a home now, and also what it's likely going to be like to buy a home a year from now. So we're going to get into that right now. Hi, this is Andrew with the Andrew Smith team here in Frisco, Texas. And, if you've seen videos I've done in the past, you'll know that I'm certainly, and this video is no exception, I'm not trying to convince you of anything one way or the other. I firmly believe that you need to make the decision that's best for you and your family. But I want you to make that decision based on fact, not fiction. A lot of the headlines out there don't tell the whole story. So today, in order to help you with that, I wanted to actually break it down. Many people understand things much better when they actually see it. So that's what I'm going to do for you today. So I've actually put together a chart that kind of shows what would have happened if you bought a home a year ago compared to now, and also what it's likely to look like a year from now. So I'll go ahead and share my screen. All right, so here's what I put together for you right now. And again, yes, some assumptions have been made, and I'll explain those as we go through this. All right, but starting up here, last year, as you know, the market was inundated with multiple offers and bidding wars. So if you had a home that was listed for $500,000, it is very likely that the sales price on that home would have been approximately $550,000. May have been a little bit less, could have been more. I know of plenty of homes that actually sold for 75, 100, 110,000 over list price. So for this example, I've just used 10% over. That would mean that you would have had a loan amount of $440,000, assuming that you put 20% down. Now, all across the board here, I've assumed a 20% down payment just for the purpose of this illustration. Mortgage rate would have been about 3.5%. And at that point, your principal, interest, taxes, and insurance payment would have been $3,222 a year. Now, if we fast forward to currently, we're going to assume that the house is right around 500,000 again. Yes, I know prices went up a little bit. They dropped a lot last summer. They've been treading water. So this, again, just an estimation. That same $500,000 house now, chances are in the current market, you could probably get that for $485,000. The same 20% down at a 6.5% mortgage rate, which is where about they are as of this recording, would result in a mortgage payment of $3,568. So as you can see, just over $300 more a month than it would have been just a year ago. So next year, now I've got that same house costing $525,000. So why have I done that? Why $525,000? Is it going to be $525,000? And the answer is I don't know for sure, and neither does anybody else. What I do know is that home prices here in Frisco are expected to appreciate in the last year or in the next year. How much they appreciate varies on what report you actually look at. We are still in a highly desirable marketplace. There's still a lot of people moving in. I can tell you that the new home builders are actually starting to raise prices again as new phases are released. And I'm seeing that pricing overall is fairly stable. Now, Zillow and also Wallet Investor are forecasting that prices here are going to rise 5% over the next year. There are other reports out there that are forecasting price appreciation here in Frisco as of much as 10% in the next year. So I've stayed at the 5%. So I just want to be really clear on that. It could be higher, it could be a little bit lower. but for illustration purposes, you'll see where I'm coming from. So $525 on the sales price, 20% down payment would mean your loan amount would be $416,000. Now, they're estimating right now that mortgage rates in about a year should be right around 5.5%. Could be a little higher, could be a little bit lower, but assuming 5.5%, that monthly payment would be $3,580. So not drastically different, $12 a month more than it would be right now today. However, let's forecast that out a little bit further. And many of the lenders out there, including my lending partner here locally, have a program in place where if you close on a loan with them and when rates drop, and they are expected to drop, again, the consensus has been of all the reports that I have seen that rates will eventually settle back down to about 4.5%. That could be in 2025. That's what I'm assuming right here. And in that particular case, the lenders will actually do a refi for you at no out-of-pocket cost for anyone that's buying a home now. So in that particular case, if you were to buy that same house today, so I've used the same numbers as from here. So the $500,000 house, you're able to get for $485,000. That's the same loan amount of $388,000. But now we're looking at a mortgage rate of about 4.5%. Now your payment's $3,082. So it's actually cheaper than it was a year ago, even though the rate was at 3.5%. It's definitely substantially cheaper than it would be now or next year by taking advantage of the pricing that exists today with the mortgage rates that are expected within the next 24 months. Now, is that the way it's going to play out exactly? I don't know. To be honest with you, I don't know. But it's just to provide you with some additional information and run through the different scenarios so that, again, you can make the decision that's best for you and your family. So hopefully running through an example like that helps. If you have additional questions or a specific situation that you'd like to talk through in more detail, please don't hesitate to reach out. In the description below, I've got a link to my calendar where you can feel free to book a call. Otherwise, you can go ahead and send me an email at andrew@theandrewsmithteam.com or just try and pick up the phone. And if I'm available, I'd be happy to take your call at 469-296-5230.